Morning, guys. John here, Mr. Forex Fire. It is the 13th of October, Wednesday, and we are 5 minutes late to what we normally do. But again, we're going to set our parameters from 8:30 till 10:30. A couple of things I want to talk over today. Okay, one is obviously the trading side of things, the market structure, and why it's important that we do mark these out. We'll do this and we'll mark it out player by player as always. But on the risk to reward side of trading, okay, there is a technique called asymmetrical trading, or asymmetrical compounding. So I want to talk a little bit about that. It's just something new to myself. Again, I try to help as much as I can and try to give as much value as I can. And this sort of stuff was brought to my attention from one of the moderators in the fire group in the Discord community, Andy, who brought it to my attention, and I was looking at it. And when I was looking at it, I took a lot of interest in it, because when I went back on my 4 weeks that we done last month, or just off the back of last week, where we come to the crescendo, the end of week 4, I went over my trades after I looked at my journal, all of this sort of stuff. Okay, as you can see, a bit messy on there at the moment. And I went through each of those trades, and if I applied this asymmetrical trading, that 39% growth would have been in or around about 115% growth. Now, you heard that right. Now, that's fantastic. But first of all, let's have a look at the general move of what's happening with this price, okay? So I'll just get rid of that. So what we've got, let's get our path. So we've got these highs and lower lows. Let's just get into this. And this is just a rough, we're just doing a rough sort of path. And what this is doing, it's creating higher time frame movements, okay? And like I say, within that, you're going to have intermediary price action with regards to, in fact, we should have done that in the 1 minute, to be fair, so we'll just get rid of that. I do apologize. Let's have a look at the higher side first of all. Again, it's staying within the zone like we were seeing the other day, okay? These orange pathways, and I do believe going back a few weeks ago from a stretched out higher sort of swing point, these were going to be firebox areas, and you can see it is respecting these areas pretty well. We will be getting rid of these this week as we move on. However, we've still got a couple of areas of interest here. It's more or less nesting into one another, and again, these are going to stay on the higher side for me at the moment as point of interests. Just want to go to the 1 hour a moment, and then we're going to mark out on the bottom side this here. Okay, so we've got on the upper side supply, bottom side demand. Just going to get rid of some of these boxes. Then we're going to set our goalposts, and then we're going to talk a little bit more about the compound and stuff. Okay, so we've done that. We can see on the 1 hour we've come down. We broke this structure here. It's mitigating into this area pretty well. It's rejected, come back out. It's pushing out. So I do believe on the bias on this, we get a push out on this consolidated pullback area. We're going to push out, a bounce back off the orange line, and then we might go to the higher side to take these out. Now, I hope that this happens simply because I've got a trade which is live at the moment on one of my other accounts. It's nicely in profit. I closed half of this out early this morning. Where are we at? closed 35. I closed $35 of profit out this morning. It's still going for profit at the moment. I've got riding on it just a 0.25 lot size. There's 180 profit if that goes up to there. I've moved my risk just above break even plus 2 pips, so it's a risk-free trade now. So basically I'm heading for the higher end areas up here. Again, we are in a little bit of nice profit, and again this is risk-free now, so I can just let that run all day. So I do hope this is going to push, break, touch on here, and then go to the higher areas. That's my thoughts for today on the Euro USD. But we go down to the 1 minute and see if we can get any. That's a longer term trade that I've taken, by the way, as well. So we are looking for the scalp and stuff today. So that account there that I've showed you, that's for the longer term. This here is always going to be for the shorter term stuff. Okay. So first of all, let's get our goalposts in play, and then we'll talk more on this compounding stuff. So there's the yeah, 30 start. And again, I'll always do up to 10:30 if I feel that I've took enough profit, or if the trades are not going my way. This is where your discipline comes into effect. Maybe you need to finish the session early. You can do that. There's nothing wrong with that. This just keeps you in a concentrated area. Let's just take a look. Again, we just scroll in and out. We're on the 1 minute. Let's get the path. So we'll start it from yesterday's part session. Do that. And again, you don't have to be spot on with this. Just the main swing lows to swing highs. And there's an importance on why you do this. I do this every morning. That's a big impulse drive for me, to be fair. Do that. Do that. Right, so as you can see, we've just got intermediary price, and when we go up the time frames, what happens is the price will sort of come into respect these areas, and you see that that's come in really well, especially on here. That impulse drive there, that's just showing you. You've then a little bit of a green candle up, a little bit of a green candle again, and then we're coming down. That's acted pretty well as well. From here, I'm pretty happy with that. So what we've got there with a 1 minute, we go up like 2 time frames, so it's 15 minutes generally. And again, you can see from there, you've got your intermediary price. So the black line on this 1 minute, it's overlaid as a 15-minute or a half-hour sort of price action, if that makes sense. So these lines is a higher time frame of 15 minutes to half hour. Now, there's a reason why we do this. It's simply because if we get any pullbacks, okay, if we do get any pullbacks, we know that there in there is generally the 15-minute or the half-hour price, okay? So that would be generally the candles for the 15 minutes or the half hour. We always talk about 50% as well. So the 50%, we could expect a mitigation coming into play from that aspect and bouncing off to go higher. Okay. And again, I'll leave this on just to show you the 1 minute. We could also, I suppose, look to get in on a trade on this particular candle here, because what we've got, let's just drill in. Let's get drilled in. It might activate before we go in. Imbalance wise, that candle, it's wick to wick. We've got imbalance there, so we might find that price will come down the halfway point and sort of react from this sort of area. and bounce up. It's a possibility because price does tend to come and respect these sort of areas. So from there, what we could do, because we've had that break of structure from these points here, we could technically say, right, well, we'll take a point from here, and the target area is around about a 1 to 3. From there, guys, again, what we've had, just to mark these out. It's always good to mark these out. Break the structure. Okay. Clone it. You've also had a break of structure here. You've got a low. You've got a higher high. You've got higher high. And then again, you've got a higher high. Now this is flagging nicely into this area. We'll see, we'll get a respect. So you've got a higher low. And it's, like I say, it's very important. It's very, very important that you draw these out, in fairness, simply because it gives you a play-by-play, if that makes sense. And you can always look back on these when your session sort of ends, and you can have a look and say, yeah, well, we've got our big path, as we call it, the bigger path, which is given our bigger time frame, the higher, or the HTF, the higher time frame. Okay, on this will be 15 to 30 minutes, but within that bigger path, you've got your intermediary price, which is the 1 minute, and this works fine. I've done this for ever since I've done my trading. It's been a massive game changer for me, because it helps me identify higher time frame swing points, because I know that within that swing point, within that range, there's going to be a price actionable area where price will come back to respect. If we do we'll get the magic wand out. If we do come out, as we've done here, we've come out, we broke the structure. If it wants to come back in and break the structure of these intermediary prices of the impulse drive, it's then entering the bigger, higher time frame zone, which is of this big orange box. Okay, and we should then anticipate price to possibly come down to touch into our 50% area of this higher time frame ranged box. But also we can see here we've got an engulfing move of an impulse drive of where buying has just been in control. Within that, just above the candle from wick to wick, we've got an imbalance area, which is just about 50% of that range. And then from there, you can see it's more or less at the open of the body of that candle. Okay, so there's a 1 to 3 risk to reward on this at the moment. Again, we could push a bit lower, but my anticipation for price at the moment and how it stands is to move up to this higher side, to be fair, which I hope it does overall today, because like I say, we are in on a higher time frame entry, and that is what it is. It's a longer term trade. These is quick in, quick out, get your quick move, get your quick 3% if it was to come in. The other one is a longer term trade, so there's a bit more sort of pippage when it comes to the SLs and things like that. A lot more room for maneuver, and structure holds its validity more on the higher time frame stuff. So we're just about to come in touch. I was going to go on a whiteboard and talk about asymmetrical compounding, but what we'll do is we'll just wait a moment, see if this touches in. Let's take a look. That might actually touch in. Right, so what we'll do is we'll go to the whiteboard if I can. Is there a way I can get on the whiteboard? Let's take a look. Chat, stop video, stop share. I'm just going to stop share for now. Okay, make this bigger. Slaps. Right, so there we are. We've got a whiteboard, right? So I'm going to talk at the moment about something called asymmetrical compounding. And while we're talking about this, we'll go back onto the chart a minute to see if we actually hit. Okay, so let's have a look. Just bear with me, guys, because once again, my phone is going daft. Right, so I've got right, so on here we've got like I say, we've got what we call asymmetrical compounding. Okay, now what does that mean? It just basically, it's once you get a couple of trades, yeah, let's say you're, in this instance, it's a 1 to 3. Once you get a couple of trades, you're going to compound it a bit more. And I'm going to show you what I mean by that. So let's say, just see this, draw. Yeah, right. Right, champion. Right. So let's say you've got a risk to reward of your risking 1 to gain 3. Okay, that's what's happening on this trade at the moment. So let's say that this trade wins. You have gained 3%. Okay, now all we are waiting for on this is to win 2 trades. 2 trades, and then I'll show you the magic on this. Right, your next trade comes in. That we'll just stay with the 3 as a magic number. I mean, this, it doesn't matter whether it's 3, it's 2, because obviously your risk to rewards will change from time to time, but we'll just base this as if it's going to be 3 each time. Okay, so this comes in, that one wins. Let's say this one wins. You've now gained 6% growth. Okay, so that's 6%. Right, so let's say now you've got 6%. You now want to do what we call the asymmetrical compounding. So what you're doing is you've got your 1, 3%, plus your 3 is 4. Okay, so after 2 winning trades, that's what you want to do. Again, if you went on to your 3rd trade and it was only your 2, you would do your 1 plus your 2. That would be your 3. Okay, so then what you're doing is you're going to risk the 3% by the 3 if it was that 3, but on this occasion we're going to stick with like the 1 to 3 risk to rewards. So as a rundown, you've got trade 1 is your normal risk to reward of 1 to 3. You've won 3%. Trade 2, risk to reward of 1 to 3. You've got 6% banked, right? Okay, so now we're just going to stick with a preference of 1 to 3s. Okay, so we've got a 1 to 3. You're going to plus that, so it's got 4. Okay, so now because you've got that number there, you're going to do a risk to reward. It's a 1 to 3, but you're going to risk your 4%. Okay, by your 3. Now if that comes out and that 1, obviously it's 12. Okay, your 12 plus your 6 would equal 18%. Okay, massive jump, massive jump. So let's have another look at this. Let's get the rubber. Let's have another look and just see what happens if you lose one or two. And hopefully this is just sinking in a little bit. So we've got, again, on the preference, risk, reward, 1 to 3. Okay. So again, if this one comes out, you've got a 3%. Okay. So then we move on to the next trade. You're risking 1 to 3 again. Okay. That's a winning trade. Let's say that one loses. So you've lost 1%. That comes down to 2%. Okay. Then we move on. Again, we'll just keep it as 1 to 3. 1 to 3. Let's say that comes in 1 to 3. It's a winning trade. You've got 3%. That takes you to 5%. Okay. Now you've got your 2 winning trades. Okay. When you've got your 2 winning trades, you're going to risk your 3 plus your 1 is 4. Okay. To your ratio of your 3% gain. Okay. So it's 4 times your 3. Let's say that one lost. Okay. Let's say it lost. All that does is it brings you this back down to a 1% gain. You then go back to risking your simple 1% to the 3. If you win, you want your 3%, that takes you back up to 4%. Okay. You're then going to be doing another, let's say it's a 1 to 3 again. If it wins, takes you to 7%. Now you take your next trade, you 1 to 3, you just plus that together. So you're risking 4 to possibly get a 12% gain. Okay. Well, let's say it loses again. Okay. You've lost 4% from your 7% gained. You're down to 3%. Okay. Again, 1 to 3 risked. Let's see, you lose again. Okay, you're down to 2%. And you see here at the moment, you've got 1, 2, 3, 4, 5 losers to 3 or 4 winners, and you're still 2% up. You see the power in this? Now let's see your next one. You're 1 to 3, you win. Although no, let's say you lose. Okay, you're down to your 1%. The next one, 1 to 3, you win. You've got your 3% gain on the 4. That's 4%. Okay. And then let's say, obviously, you're on the 1 to 3. You're going to plus these two together because you're on 4%. So then you're risking your 4 onto your 3 to gain 12. It comes in. You get your 12% of that. You add it to the 4%. You're now up 16%. Now, do you understand where I'm coming from with the asymmetrical compounding? All you need is 2 winners. 2 winners. And we just based that on a simple 1 to 3 method. Okay. So you get 2 winners on your third trade. You are adding your 1% risk to whatever the reward's going to be. That's going to be the total that you're going to risk overall, because you've already compounded. You've already compounded at an accumulative amount of percentage. And then if it wins, you've just grown your account by ×3 or ×4. If it loses, you simply go back to the method of you risking 1% or you're risking 0.5%. From there, you need to get a second trade in the bag. As soon as you've got them 2 trades, you are then going to push yourself On the third one, by doing the risk, whatever you're risking, add it to the accumulative percentage that you could win. That is going to be the percentage that you're going to risk. So that's your new risk. Buy whatever the reward's going to be here. If it comes in, again, you've 3x'd your account or 4x'd. Again, just a, let's see if I'm just going to the share screen. The whiteboard, is it going to still be there? Yeah. So hopefully this sort of stuff shows you the power on what that's going to give you. Let's have a look. So again, you've got one. Let's just make this different color. You've got 1, 2, 3, 4, 5 losers. Okay. 1. And you've got around about five that have won there by the time you've got your 2 on there. And that would have grown your account by, what was the percentage overall did we come to? What was the conclusion? 16%. 16%. Now, if you were on a challenge, whether it be FTMO or whatever, all you need to do, it basically, in all honesty, is within 3 trades you could be past the challenge. But it's all about having the mindset of it's just numbers. Okay, it's just numbers at the end of the year. You don't look at the monetary value. You need to look at this as numbers, and that's all it is. 2 trades. The third one, if you win that third trade, then you could be 15, 16, whatever plus % in the bag. The moment you start looking at the monetary value side of it, that's when your emotions will start kicking in. It's when you'll start doubting things. But the thing is, the asymmetrical trading, or the asymmetrical compounding is there, and it's a system where it will not bust you, if that makes sense. Because as soon as you've had a losing trade, you go back to just doing the risk to reward of whatever it is to gain that. Once you double up and get your 2 winners, you are then, whatever your risk is, you're adding it as an addition to the reward. Combine that, and then you go down 1, and you're risking, because it's 1 to 3, you're risking 4% to gain. And like I said, to keep it easy, for the 3%, you're gaining 12% because you've already had 2 winners. So in essence, that 4% risk that you're risking, you've already gained on the 1 to 3s, on the 2 winners, 6%. So even if it loses, you lose the 4% from the 6%, you've still got a 2% gain. Now, I hope that sinks in. I hope it has given you a little bit of a light bulb moment. Let's screen went off for a second. I do apologize. Let's go back to the actual charts and see if we've entered. Yes, we've entered, guys. Look at this. This is fantastic. To the pip. And now you'll see what I mean with this. Don't make it up. Look at that. To the pip. Let's see if we'll get that 3% in the bag. And again, there is things you can add to your trading arsenal with things like this and everything. What you've got here, trend line, because we've come down here, you could have that area there as a structure point to take partial trade, move to break even, and things like that. Or it could be a simple move your stop loss to break even. But again, we'll keep this on here. That at the moment is down to 1.5. I'm going to keep this going. I'm going to see if we can push that up to the 3, to the 1 to 3. If it does, it means we've banked the 3% straight away in the bag. It's happy days. And we'll just see if it plays out. I'm going to pause the video for now, guys. We'll be back in a moment. Hi guys, so what we've got at the moment, if we just drag this over, you can see here we haven't crushed over to here. So this at the moment is a lower high at the moment. So again, what we've got underneath as well, you can see from this standpoint, that wick up to there is imbalanced at the moment. Like I say, let's mark these out as we go along. So we could get a price come down to mitigate into this to get the bounce up. I would like to think that this would hold its structure and break. If this price here was to move and crush above this, I've got no doubt it will then go on to go above here, to be fair. But again, we need price to drive to do that. Hopefully we will get that. Let's have a look. Right, so that's my Fire One champion, right? So again, price wise, we have been looking at intermediary price going into the session on this morning. The high, the low here. Okay, this is on a higher time frame. This would be on around about the half hour time frame. What I mean by that is this here, this move here on the initial range is the half hour price. And then inside we've got intermediary price of where we are. Okay, so the low, we've got the high. We've had a breaker structure here. Again, we've had the breaker structure out. We've had two breaker structures. So we've created a bit of a channel. From there, we've had the breaker structure from that high point to here. Okay, so then what I was looking at initially was the imbalance between this and this here, simply because we've got an engulfing move of buying power. Okay, the engulfing move of buying power give me an imbalanced area, so this was of interest. From there, I used the 50% of the imbalance as entry. However, the range, the full range, as you can see on the yellow, we were expecting price to come into that anyway. We just sort of drilled down the options on where things were. We have a banker's candle here. Okay, again, from there, what you've got as well, looking at it, is possibly, like I say, was a harmonic pattern. Again, 50% of these harmonic patterns, like I see on this bit here, you can see we've come back down and it's mitigated onto that as well. However, we are wanting price to go and exceed and push past this lower high. If it does, got every confidence it will then fulfill the 3%. But again, that's where we are structure wise. That's where we are today. That's where I am on this particular trade. We are hoping that this one will come out, because it'll be our first sort of win going into this week. From there, guys, we can talk more about the asymmetrical compounding once we get our two trades in the bag. But I'm going to pause the video. Let's see if this plays out. Again, if you're getting value in the stuff that I'm doing, and you want access to all this sort of stuff where there's going to be even more on this, you just need to hit there'll be a join button underneath somewhere here on the video, and for the price of a cup of coffee, you will get access to all this sort of stuff as well. So there's going to be even more value, even more stuff. I've got even more insane things that's going to be happening soon with regards to being able to do the three things I always do, which is build your confidence, build your consistency, and then build on your profitability. So I'm going to stop the share for now and pause the recording, and we will be back in a moment. Hi guys, come back. As you guessed it, just your Forex Fire mug, and I'm having my half-time cup of tea. Come back, and where it looks as if we're heading towards our 3% gain for the day. So all being well, this is going to push up and hit into that for us. Hopefully it should do, because we've gone above that lower high now. So again, let's just take a look. Let's just see if we get that push up. So this could be, this pushes up, we will have banked at a 3% there. I'm just waiting for it to push on. And let's get that drilled in. Let's get that drilled in. Come on, push. Yes, there we have it, guys. Confirmed. We've got the wick. We've got the wick above it. So good start. Happy days. So at the moment, on the 13th, we've got ourselves a 3%. Okay. If we add it onto this, this is going to give us obviously that's a 4-week running total. What I'm going to do, I'm going to make this a new color. I'll make this a new color. Will it allow me? Let's take a look. Purples. So we've got a new week. Okay. So far, copy that. So far, running total of 3%. Okay, so we're now going to need to look for our second winning trade, if that makes sense. So again, we're just going to minimize that, make this a bit bigger. Let's scroll out. Let's scroll out. So what we've got definitely we've now got a high area. Okay. So this here is 3%. That's a 3% win. Okay, that's a 3%. Get this bigger. Now we've had a break of structure. If I was to get in on another trade, I would possibly be looking at an area of around about there, having to stop about there. There's a risk reward of 231. Because we're looking at the order blocks, remember. We've got the order block here, but we need to go at the swing point in all honesty. Let's take a look. Let's have a look. I do apologize. We've got an entry there. Again, the stop's just got to be below the swing. So there's a 1 to 2 there. We'll see if this comes out, guys. I'll pause the video. I've got someone coming to the door. I'll be 2 seconds. Sorry about that, guys. I had someone at the door. Yeah. So there's a 2% win, guys. We're crushing it the day. 2% win. Now, as we move on, this is where it starts getting very, very interesting. Okay. So now we've got a 5% for the day. Okay. 5% for the day. There's nearly a pass in itself. Structure. This is the bit I want to get in everybody's head. Okay. I've been trading for 4 years and I've been here, there, and everywhere with a lot of stuff. Took a lot of knowledge in, took a lot of nonsense in as well. And it's about filtering out the noise to the quality. So it's quality over quantity. Okay, I'll say that again. You want quality over quantity. Now this, I've always been a long-term trader, and I've got a long-term trade in at the moment. And again, I'll show you. We'll go on to share screen just for a moment. I've got a longer-term trade in at the moment. It's in about 40 odd profit. If it comes out, there's about 180. Okay, it's a no risk. It's on a risk-free. So I'm not bothered if this comes back down and stops out at a couple of pound profit. I'm going to let it run because I've got confidence that we're going to run price to this high side on the Euro USD. Okay, comes out to a couple hundred quid. Okay, now from there we've got 5% for the day. This is based upon the fire scalper. Now the fire scalper in itself, is very, very powerful because it's a combination of smart money to a certain extent with the understanding on price action and price movement without the use of indicators and anything else. And I've done this in front of your face right now. I've identified my POIs, my point of interest, where price will come to mitigate to, where price will come to respect. I've not been rushed. I've not felt stressed because I'm able to identify these areas. And again, we'll go back on the screen, because I'm able to identify these areas with such ease now, and because we mark the structure up as we go, we can then build a story as we're going along, and then be able to look to the left of that story and identify structure points, identify points of interest, identify what the higher time frame's doing with this path. Because we know overall, when we build this structure here, we know price is going to come back into a range on a higher time frame to respect those areas. And two, we have that intermediary price, which again will be respected. In this instance, it was the imbalance. We got the 3%. We come down, we touched in as we made a higher high. I just looked at the previous order block and I took that from the swing point and we grabbed another 2%, 5% like that. No indicators, no softwares, no stupid colors, no exclusive whatever to tell you what to do. I've just gained a 5% growth there. Now from there, we speak about the asymmetrical stuff. Okay, if we go back onto that screen and share again, we are now on the ability to be able to do some asymmetrical compounding where we have gained like the 3% and then the 2%. So at the moment, let's just get the eraser and we go back to the whiteboard. Now I hope this has given you loads of value of the day, because again, this is what shifted my mindset, my thought process on, yes, I'm consistent. I've got my confidence. I've got my consistency. But now with this, because I've got that level of confidence and consistency, applying that to that, this is where the profitability side comes into. Okay, so we've had the risk to reward. Let's have a look. We've had, get this blue. We've had the R, and excuse the writing. So we've had a 1 to 3. We got a tick. Okay, we got a 3% gain. Happy days. And again, this is structured within that goalpost approach. The next trade, it was a 1 to 2 tick. It came in. It gave us 2%. So it's given us now 5% growth. Now, for instance, let's say the next one, let's just say we just go with a conservative. Let's say we go with a conservative 1 to 2. Okay, so you're gonna get your 1 to 2 risk to reward. You're gonna plus that together. That's gonna give you 3. Okay, so you're gonna risk 3 for the 2. Okay, so 3 risk times the 2 reward. Okay, put the R there. Now, if that wins, your 3 times 2 is 6% growth. 6% onto your 5. Yep. Is 11%. 11%. Now, let that sink in for a moment. I'm going to show you something. So if the next trade that we take was to come in, and on average, my trading day consists of 8:30 to 10:30. Okay, 8:30 to 10:30. We can generally get 2 to 3 trades a day. Now, if my next trade is just that conservative 1 to 2, and I'm going to risk 3% to get the times 2 amount on it, and what happens on that? It comes in 6%. We've already banked 5. 6% on that is going to give us 11%. I'm going to show you something. Just stop the share, and we're going to share screen. We'll go on to this one here. 11%, right? Let's just take a look. The whole of last month, okay, 39% now. If we look, let's just take a look. It took us a whole week to get 12.79. A whole week of 12.79. Now, that's fantastic. Don't get me wrong. That is bloody fantastic. Anybody would be happy with 12.79% in a week. What if, using the method that I'm showing you now, you could nearly or more or less get that a day? It all depends on results, depending, obviously, again, results never sort of duplicate themselves all the time. Okay, there is risk and elements of risk to this. However, it's a compounded effect with regards to asymmetrical compounding. The risk is calculated. The risk is if you lose that next trade, and again, if you were to lose that 6, we'll go back on the share just so we can be more transparent with this. So this is what happens if you were to win it. Okay, if you were to win, okay, you will get 11%. Okay, worst case scenario, if that 3 on the 2 was to lose 6%, okay, you'll just be down to a -1, okay, but then you just go back to your original 1.3. If it comes in 3, you'll be back up to 2% growth. Okay, so again, on this preference here, what you maybe could do is risk another normal trade. Let's see if it was just get the eraser. Let's see, you've got your 5% there. Okay, let's see, you want to risk another trade. Let's see, it was a 1 to 2 in this instance. You could say, right, we'll go for another 1 to 2%. That would take you to 7. Okay, you've got that in. From there, your next trade may well be your 1 to 3. If your 1 to 3 was to lose, but you're going to compound this asymmetrically, so it'll be worth, that will be worth 4 in essence. Okay, so let's say that lost. Okay, you're 4, because that's what you will be risking for the 1 to 3. You will lose 4%. Okay, you've lost, unfortunately. Let's say from there you would take it off your 7. Your 7 would then become a 3% gain. Still, that is, you see where the power comes with all this. It's fantastic stuff. So I'm just going to stop the share, and then we're going to apply the share on this screen. Go back, see where we are. So again, we are going to enter a trade. We enter it based here, here. So that's not a massive trade in all fairness. So again, this is for educational purposes. We've got a 1 to 1.39. Again, in a little bit of pain in the day. So you're going to be risking 2.4. You're going to be risking a 2.39%, okay? And if that was to come out, it would be a 3.3% gain. Let's just see if this comes out, okay? So on this, you're risking, you're going to be doing a 1 to 1.39, okay? To 1 to 1.39 R. From there, you're going to be doing 1.39 plus your 1. That's going to equal 2.39, okay, percent. So then you're going to be risking 2.39, it will be, and you just times that. You're going to times it by the 1.39 risk to reward, okay? Again, you could make that a little bit higher, to be fair. We might change the mathematical equation on this. 1.72, right? Yeah, let's just change that. So 1.72 to risk to reward of 1 to 1.72. How can we get this to a 2? Yep, there's a 1 to 2, right? That's better. Makes it easier. So you've got a risk to reward of 1 to 2, okay? So you're going to take your 2 plus your 1 would mean it's 3%. So that would mean your 3% gain. That's your 3% added up on your risk to reward times by the reward here. It would be 2. It would be 6% gain possible. Okay, what we'll do is we'll leave that there. So again, it's a 1 to 1 to 2. So what you're doing is you're taking that 2% plus the 1, so it's a 1 to 2. And then that gives you 3. So you times your 3 by your 2% reward possibility. It's going to possibly give you a 6% gain. That 6% gain is then going to take that 5% that we've got today and put it up to 11%. We'll pause the video. We'll come back in a moment. We'll see if this enters. We'll see if it gets us the trade. And again, it's all about just following the price action, following the trend with your order block. See if we can come down, see if we can get an entry, see if we can get this ticked off at 11% today, guys. Okay, so we'll be back in a moment. I'm just going to have my halftime cup of tea. Right, so again, guys, we want to mark everything up as we go along. Okay, so we've got here would be a high or low. Let's mark down at 20. Okay. High, high. Higher, lower. We'll just keep it visually easier to look at. Higher high, rather than do every swing point, if that makes sense. From there, we've got a higher low. So what we are aiming for now on this channel coming up, we're waiting for this to keep extending and then jump upon this area here. We do need an entry. Okay, so just get rid of that one there. Excuse me. We do need an entry, but if you look at the footprint again, okay, we speak about an imbalance. Now, from that wick up to there, there's imbalance at the moment, okay? So we've had an engulfing candle of buying coming out. We've broke the structure of here. So again, we need to be visual, okay? So let's keep as is, break a structure. Clone, we've had break a structure there. Clone, had a break a structure there. Again, clone, we've had a break a structure there. And it's all about being visual on your trades, because at the end of the session, what's good is, again, you can go to the camera, go to save the chart image and put this down on a spreadsheet, and you're able to look back on how your trading session went for this day, okay? And then you can identify, yeah, well, before we ended the session, we can see we had a harmonic here. We laid out a big path, the big path being higher time frame. You just scroll out to look at a bird's eye view of your 1 minute chart, do your swing points, okay? This will represent the 15-minute or the half hour. From there, you then have your intermediary prices. We knew we had this price range here. We broke structure up on here. We come back into 50% of that higher time frame structure. But not only that, looking into the intermediary price range, you can see we had an engulfing price move from out of this area here. 50% of that was going to be an expected area. Again, for confluence, the price range that we have here, we have 50% marked off. We touched in beautifully. We come out, we broke structure, we broke structure again. We hit a 3% win. We hit a 2% win, okay? And now we are anticipating a move to come down to take out the imbalance here, okay, to touch in on an entry based upon this structure point on here. And again, we are asymmetrical compounding today. So we've had a 3% win, a 2% win. We currently stand at 5% growth, okay? So you take this trade here, which is a 1 to 2. So that's a 1 to 2 risk to reward, okay? And just to make this easier. So what you're taking on here now is you're taking that risk to reward of 1 to 2 is 3, okay? So mathematically, 1 and 2, you add those together, 1 and 2 is 3, so you're going to risk 3%. So you're going to do 3% risk, okay? If it comes out on a 1 to 2, it's 3% times your 2% reward, gives you a possible 6% growth. If that was to come out and play out, your 6% growth on that one particular trade gets added to these two of the 3% to 2%. That gives us a combined growth today of 11%. And that has been attained within a 2-hour structure. It blows your mind. It really does blow your mind. So that's the rundown, the run of play. We structurally had another reset, like a sit back. Let's have a look where we're playing at the moment. Let's see where our structure points are. Let's just see we're identifying these correctly. And now we can see we are now heading into the imbalance area. Let's just take a further look into this. We can see, let's get this. So now we've mitigated, look at this, beautifully onto the 50%. How I always talk about 50%. The imbalance wick at this stage was to that wick there. We've come in more or less more than 50%. So if we were to get this here, which is our quarter points, we've come in below the 50%. We want a little further push down into this, just to push out of the fire zones to get our entry. We may get that because we need this. If this gets respected and tested, there's every chance we can get that little bit of a push out to touch the entry area. Hopefully we'll get that. From a swing point aspect, from that low up to that high, we are more or less slap bang in the middle of the magnets at the moment of all the fire zones. Okay, so we might get the bounce off this to go up and then break structure on here, but it's something that we possibly could have refined a bit more, to be fair, because what you've got is that area there, you see this, like I say, I like to draw these things out. This fire zone here is more or less right in the middle of, it's nested within that imbalance area. So again, we might get the rejection of this area here. Hopefully we'll come down and get the touch on this, but at the moment it's respecting the nested area. We're getting the push out, it's coming down. Let's see if we can get the push and touch. Hopefully we'll get the push and then touch. How far are we off? It's more or less the entry. We're about not even a pip off. Come on, let's get the touch. It may even come down and stop us out. We don't know. But again, if it does, there's the entry. There's the entry there, guys. Right, so if we get rid of this here, and then we get rid of this, we can see it's being respected. Get rid of this. Scroll out. Let's just see how this plays out. Let's see if it gives us that 2% gain. If it does, happy days. It means the 2% risk, not gain, I should say, the 2% possible gain is times 3, because we have accumulated a pot of percentages today. That 3% gets risked on the 2, so that's 6% possible return. From there, the 6% growth that we get on this, if it was to come out, would be put into the 5%, and that means we've had 11% growth today, which would be fantastic. But what I'm going to do, I'm going to pause the video. We'll be back in a second. We'll see how this plays out. Hopefully, all of the stuff I'm doing is bringing loads of value. It's giving you that sort of aha moment, and you're seeing the power in this. If this was to stop out, doesn't matter. Again, we don't worry about that. It just means we go to a -1 and we just continue the cycle. We go to no, we don't go to a -1, sorry. We've risked 3%, so the 5% we've gained, if we do lose this, the 3% knocks that down to a 2% profit for the day. So again, it's all about risk management. It's understanding the asymmetrical compounding. It's understanding your risk to reward, but it just puts your risk to reward on steroids, if that makes sense. So I'm going to pause the video. We'll be back in a second. Hi guys, so what we've actually had a stop out. So in a way, I'm pleased this has happened, because we can now look at what happens if we have a loser on this eventuality. Okay, so remember, this is we're doing this for educational purposes. So even though we've had 2 great wins straight off the bat, I'm pleased this has happened on this structure point, as opposed to the 1 to 1% risk. Okay, so 3% has been risked on here. So 3% was risked, okay, and it's lost. 3% lost. Okay, so we do that. Let's take a look at what you could have won as this here. maximize that. Let's take a look. So on this preference, okay, if that 6% come in, we would have grown, we would have doubled the account. Okay, we would have doubled that. Unfortunately, we've had a minus 3%. Okay, that minus 3% has taken the total for today down to a 2% gain. Now, this is what happens when we sort of, let's just share the screen, whiteboard. Now, this is what happens when we have that lost. So again, let's get the eraser out and we'll speak about what's happened. Okay, let's just get the eraser out. And I hope you're enjoying this session today. Again, all done in front of your eyes, your very eyes. So let's get the drawing tool. So we've had our asymmetrical compounding, we've had our RR. Okay, so first of all, we had a 1 to 3. It won. We gained 3%. Okay, our second trade was a 1 to 2. That won. Okay, so just get my handsome face a little bit bigger. So now we had a 1 to 2. That's give us 2%. Okay, but we won the previous one, so that has given us 5% growth. Okay, so we're gonna do the plus on that. That's 5%. So then what's happened is the next one was a possible 1 to 2. Okay, because it was a possible 1 to 2, what we are doing, we are just adding those two numbers together. Okay, which is 3% you're going to risk. Okay, so if this was, I'm just going to go to the power of 3. Okay, if that was to come in, you would have gotten a 6%. Okay, a 6% gain. So the 6 plus the 5 would have been 11. Unfortunately, that lost. Okay, so 3% risked. Okay, on that it lost. So that is a 3% loss. Okay, minus 3%. It's not a minus 6 because you're risking 3% on the overall risk, and then the reward is you would times it by 2. So your 3 times 2 would have been 6%. So we are on a minus. Let's just see if we can make this a little bit better. So on this one, we have hit, like I see, a minus 3%. That's taken our total back down today to a 2% gain. Okay, now when you look at it from taking yourself out of the trader's chair and you look at the numbers, okay, your first win, you were on 3%. Okay, you've lost 3% here. Okay, but it doesn't matter. It doesn't matter. Your first initial win, you're only down really by a 1%. Okay, yes, you were at 5%, but if this had came in, okay, that there, if it had came in, you would have been 6% up plus your 5. Okay, that would have had you on 11% for the day. But again, we're not dwelling on this because it's a numbers game. You don't look at it as a monetary value. Okay, so from there, what we are doing, guys, basically, what we are basically doing, we are now risking, if let's say we had a 1 to 3, okay, and if that 1 to 3 come out, that's then going to take you to 5%. Okay, let's say we'll go back to 1 to 2. If the next one after that was to come out 1 to 2, the 1 to 2 give you 2%. If that was to come out, that would take you to 7%. Right now, that's your 2 trades winning in a row. Let's say the next one is a 1 to 3. Again, you will just plus that together a 1 to 3. So it'll be a 4 that you're going to risk. So a 4% on a 1 to 3. If that was to come in, it would be 12. Okay. So you've already won. Let's say after you take this trade, you've won these next 2 trades here. So you've got that 7%. So your third one would be your adding an addition of your 1 to 3. So that's 4. Your 4% risk to get times 3. The amount is 12. Your 12. Your 12% that you've won on that one trade plus the 7 you've banked, okay, is going to give you 18. Is going to give you 18%. Now, do you see the power in that? It's just a numbers game, and all it takes is just 1 or 2 trades to come in. And if you do your analysis correctly, and you've seen what I've done there today, I've hit 2 off the belt. Yes, that last one came in as a loser. I would rather have that came in and lost, just so I can show you the calculation on the numbers. I hope this is sort of giving you a little bit of a light bulb moment. But if I look at this and I go on the preference and I get an average of a risk to reward of 1 to 2 or 1 to 3, and I get the 2 winners, it's happy days, because I know on the third one, I'm just doing the calculation of risking the 1% to the reward, which may be 2 or maybe 3% gain. I add those 2 numbers together. I'm then going to be risking either on the next trade, it will either be a 3% risk or it'll be a 4% risk. Okay. And then if that comes in, you've smashed the target, and then you're more or less doubling your money up. So I'm just going to stop the share and share the main screen desktop. So at the moment we are on 2%. Okay, so what I'm going to do today, I'm going to do this. It's 2% gain for today. I'm going to call it from there. However, we're going to have a little bit more of a chat, and I hope you have taken so much away from this today. Again, I'm going to go onto the bigger screen, make that a little bit bigger. It's been a fantastic session for me personally, because I'm learning so much as I'm going along with this. The value that I'm given, I know I'm learning from it. The more and more I do with this, and again from there, we are doing the structure. As we come into the structure, do your goalposts. Only ever do your trading between your 2-hour sort of time frame. From there, when you get to a certain point on your trading session, okay, like I've just done there, even though I've hit 2 winning trades and hit that last one as a loss, I'm happy with where I'm at the moment with a 2% gain for today. There's not many people don't even get that, to be fair. So I'm happy to leave that as it is. Looking at the bigger picture again, I've still got a risk-free trade on a longer term with this. I'm going to let that run. But again, today has been a fantastic session. If you can be so kind, drop a comment in the YouTube video. Let me know if you've watched this. Let me know if you've gotten any value from it today. Has this given you a little bit of a light bulb moment with regards to how to not just compound, because there's so many sort of groups and communities out there that go on about compounding your money. This, for me personally, it's a more strategical way to, yes, compound your money, but it puts it on steroids and 10x's that, but it does it in a controlled fashion where you are not sort of chasing money or you lose and it's affecting your balance as such. It just gives you a stage or a dial that you can turn. When you get to a certain point, you can just say, yes, we've had 2 winning trades. Let's put that little bit more of a risk in. If it comes out, bang, you double up. If it loses, you go back to you're only risking the 1%. Okay, guys. So I hope you've taken so much out of that today. Again, if you can be so kind on YouTube itself, which obviously you're watching this on, if you can sort of hit this little button here where it says join, if you're getting so much value out of this, From there, you can either come in as a Spark or a Fire member. You'll get so much more out of what we have in this community because we have so much more going on in there. And again, guys, in the description below, if you're looking to get funded, you can click on the funded area here to get more information on how to get started with getting a funded account. Or if you are not doing so, you can click on my Facebook profile and you can follow me on Facebook as well. Okay, guys. So from there, just going to stop the share. Just going to stop this.
I can trade alone.
There we are. Stop the share. So in conclusion, let's have a look. So today, we're going to go over the paper trading. Unfortunately, I didn't get into that today, so I might be doing a video on that a little bit later on today. I'm not too sure. But yeah, asymmetrical compounding. You've just seen the power of it. You've seen me do the whiteboard. You've seen me do it in front of your eyes. We hit 2 good trades straight off the bat. A 3% win, a 2% win, gave us that 5%. So that third trade on the rolling strategy on asymmetrical wise, it was a 1-2 risk to reward. So you just add those 2 numbers together. The 1 to 2 gives you 3%. So if it comes out on the 2% gain, you're timesing it by 3% risk. It's 6%. That 6% would have went lovely on the 5% there at 11%, but it didn't. I'm happy it's lost simply because it's showing you mathematically what's happened to the growth that we had there. So we gained 5%. We were turning the dial a little bit, risked that 3%, and then it's just come and took part of that out. So the 5% went back down to 2%. I'm happy with that growth, basically because if you look back on what I did on over the 4 weeks of last month, okay, I ended up with 39% overall, okay. Just to give you an aspect and just to open your mind a bit more, that 39% over the course of the 4 weeks worked out to be 2% a day. We've ended today's session, no harm done. We still on the 2% from the averages that I was getting overall of last month. But when you look at that, yeah, we took a 2% a day. We've had a chance to take that to 11%. Big difference. And again, going on last month with them 4 weeks, when I went through the numbers analytically, okay, that 39%, when I did all the number crunching and things like that 39% sitting there could have quite easily have been 115% growth. Now, if you're, and I've got many friends out there that are sitting on 100,000K funded accounts, 100, even if you said 100% growth on 100K within a month, it's 100K. That's it. Just it really does just bang. It should set the fireworks going off in your brain. But for now, it's all about what we have here. Okay, it's all about the 3 steps. The 3 steps, and those 3 steps are your confidence. Okay, your confidence, and then your consistency. That comes with what we do inside of here. That comes with what I'm showing you in front of your face each day. Structure your approach to the charts. Identify your POIs, your point of interest. When you are looking to get in on entries, look to the left to what you've previously drawn out going into that session. Keep doing that day on day on day. Keep doing it, because I tell you what's going to happen. You are going to see points of structure as soon as you open a chart without sort of putting the charts drawn up. You will eventually open up a naked chart and you'll just go bang. I can see, you'll see it instantly. And when you see things like that, it just like the light bulb goes off and the mist, the fog just lifts around you, and you just start seeing, you'll see things in your sleep, to be fair. So again, I hope you've taken so much out there. Please, if you are getting value from this, just hit that join button and you'll get access to me and so much more on what we do in and around on this Discord channel. I thoroughly enjoyed this morning. I'm now going to have a little bit of a rest, maybe watch a film. That's my trading done for today. So we'll catch us all later, guys. Until tomorrow.